Good morning, treasurers. This is your host, Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 19th July 2021. In the international market, in US, retail sales rebounded 0.6% last month versus economists' forecast of retail sales dropping 0.4%. However, an early reading on consumer sentiment in July came in lower than expected, 80.8 versus 85.5 in June. With lower consumer sentiment, US 10-year closed flat at 131 and 30-year at 193 on Friday. Please note that 126-130 is a very crucial support level for US 10-year yields. Knight research team says US 10-year at 131 is a screaming buy for 12 to 18 months holding. Did you know that Bank of England is also considering tapering its bond buying program soon? The current inflation in England is running at 2.5%, which economists are projecting at 4% within a year. In the crude oil market, crude is trading lower at 72.64, short-term range is 72 to 75. Please note that after the UAE and Saudi Arabia clash, the crude prices have come back from 77 to 72.64. In the currency market, dollar index DXY is trading at 92.71. DXY's today's range seems to be 92.30 to 92.84. Market is supposed to be range bound. Please note that DXY is still not able to cross 92.84 psychological level, upon which 93.45 looks more real. USD CNY or Chinese yuan is at 648. USD INR with a high of 74.66 closed at 74.57. USD INR's range for today seems to be 74.40 to 74.80. 74.30 acts as resistance and 74.75 as support for weekly trading. Trading idea: if DXY breaches 92.84, go long USD INR for 75 levels. Please also note that there has been a lot of FPI inflows due to Zomato IPO, which has stopped now. Rather, the money can go back after IPO is not allotted, where FPI will now be selling rupee to get the dollars back. Be alert on RBI intervention, but USD INR is poised for 75 levels pretty soon. In the domestic market, the bond prices closed lower on Friday as government's sale of bonds was at a price higher than those in the secondary market, which prompted some traders to offload stock to book profits. 563 2026 closed at 568 versus 569. 664 2035 closed at 679 versus 676 the previous trading day. Now let's dive deep into Friday's GSEC auction cutoffs. 563 2026 at 567. The cutoff was aggressive as the GST transfer announcement had lifted the market mood for shorter tenures. GOI FRB 2033 at 485. 664 2035 at 678. The psychological cutoff was at 675, but the RBI was willing to get a higher cutoff without devolving anything on the PDs. Signals from this last Friday's GSEC auctions: RBI has relaxed its grip on the bond yields and letting markets demand higher yields. Number two, this was evident with 610-2031 benchmark and now with GSEC auction cutoffs. There was no devolvement or cancellation, which is enthusiastic as investors are willing to replenish their inventory as RBI is taking off their HTM illiquid papers. Trading strategy for today and the week: 664 2035 and 2035 SDLs. That is, GSEC versus SDL yields for 2035 maturity is very attractive, and we have a buy call for 664 2035 at 680. Remember, we had informed all the listeners that there is no point in applying in auctions on Friday and buying opportunity will emerge in secondary market. Exactly that happened. Knight research team will now inform our clients when to enter the market for 664 2035. 563 2026 looks more stretched and unattractive for now. Trading range for today for 610 2031 would be 611 to 615. The market close on Friday for 610 2031 was 613. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.